about Upgrade. Maybe that's a good way to leg into the conversation. Tell us about Upgrade and how it's different from other neobanks.
Yeah, so what we tried to do with Upgrade was really trying to create a neobank for the mainstream. So I think you've seen in the US and Western Europe a lot of attempts and success at creating neobanks that tend to cater to populations that aren't falling squarely within the target of the mainstream banks. So you have a lot of neobanks for millennials, for different categories of underbanked populations. But Upgrade is really designed to give sort of better value, better experience to mainstream consumers. So a lot of our customers are, on average, about 40-year-old. They earn $100,000 individual income. Their credit score is 700. So we have a lot of very sort of population average type of metrics other than income. It's a bit higher than average. But they're just everyday Americans who aren't satisfied with their bank and believe can get more value with Upgrade. So to close the loop about the credit-led neobank, credit is a really big part of that value proposition. Credit in general is 70% of banks' revenue, so it's a big part of banking. And for that population that's mature and that's already sort of established their credit, they already have a mortgage, a car loan, 2 or 3 credit cards. So they're using credit, they have the financial resources to support that credit. And so we say, okay, if we want to cater to that mainstream population and build products that have a very broad appeal, credit has to be a big part of it.
And I know you're a humble person, so you didn't necessarily mention your background as the founder of Lending Club. I'm curious also how that experience building Lending Club and growing it sort of informed your idea to start with a credit-led neobank.
Yeah, so Lending Club was really one of the pioneers in fintech. And I think the early success and the ability to bring people to fintech at the time and convince them not to go to that bank that felt really sort of comfortable and that felt safe and really try something new was really achieved by sort of taking that credit angle, because again it's such a big part of a lot of American families' financial life. So what we were able to do at Lending Club was creating this personal loan product that sort of helped a lot of credit card holders refinance their credit card balance with a personal loan. There's $1 trillion of credit card balances outstanding that carries interest on average at 17%. So the ability to refinance at a lower rate and with a more sort of responsible payment schedule with a personal loan that amortizes down every month. So all that was really appealing and really helped convince a lot of these mainstream Americans to move away from the bank. But the offering was pretty limited at the time. And that's most of what we did was personal loans. So the idea with Upgrade was to do more, not just do personal loans, but maybe move sort of upstream in the issue, right? Instead of just sort of refinancing a credit card balance, why not replace credit cards entirely? And that's what created the idea for Upgrade Card. And then based on that, we also started offering mobile banking and really now have all 3 products, so mobile banking, credit cards, loans, that work really sort of well together for our customers.
And you're seeing a lot of neobanks approaching it sort of in the different direction than Upgrade. Start with a payment product or a basic sort of money movement product, and then eventually try to get into lending. Do you think they'll be successful sort of crossing that chasm?
Yeah, I think fintech is all taking a lot of market share from banks. And I think the time is right. I think we all have lower operating costs than the banks and can pass on some of that value to consumers. So I think many of these neobanks are going to be successful. We believe the most successful way to go about it is to start with credit, because credit is hard, right? It's not something you can sort of flip on overnight. I mean, a lot of other neobank strategy was acquire a lot of users with a free product and then monetize through credit. But credit takes a lot of time to build up, right? I mean, you have all the underwriting, data and infrastructure, the servicing infrastructure, but more importantly, you need capital, right? I mean, to a debit or payment product, that's not really capital intensive, but credit is. So if you're trying to move billions of dollars of loans or credit card receivables every year, you need some way to finance it. And so either you take it on balance sheet, and when you're essentially rebuilding a bank, and that sort of goes counter to the sort of capital light, nimble, fast growing aspect of fintech. Or you do it in the marketplace kind of way, like upgrade. But in that case, if you're trying to sort of sell loans and card receivables to banks or asset managers, they're not going to start buying right away. They're going to need a track record, proof that you can underwrite and service. And so that track record takes a long time to build. It takes years. Then you need to start slowly and then build it up over time. We think that having started with credit and having done all that work, and onboarded now more than 100 banks and asset managers that are buying upgrade loans and card receivables. I think we're in this great position where we already have the monetization engine, and can now and have already started acquiring users at a much higher rate, knowing that we already have a path to monetization.
Great. I want to drill down on the upgrade card, which you launched in 2019. You're on a $3 billion annual run rate with the card. Why do you think that product was successful? What makes it so appealing in your view?
Yeah, I think I mean, we call it the only credit card that's good for you, right? It's really a card that's appealing to consumers who are fed up with credit cards and really understand that credit cards are bad consumer products. I mean, credit cards are very high rates, 17% on average. A lot of fees on top of that. That takes the sort of effective cost well in the 20s. And probably the worst feature about credit cards is they're essentially designed to keep people in debt as possible. Either you have this minimum monthly payment, and if that's the only payment you make, it's going to take you 20 years to pay the balance in full, and would cost you sort of 3 times what you initially charged on the card, because these interests compound for so many years. And then that's how you ended up with, again, $1 trillion in credit card debt, and which is $8,000 for every single family in America. I mean, it's a big issue. So a credit card really takes the sort of opposite path of that. It's a card you can use as a means of payment, either in store or online on your mobile. It comes with a line of credit, like any other credit card. But as you use the card, at the end of the month, the balance turns into an installment plan that customers pay down every month, principal and interest, fixed rate, fixed monthly payment. So they have a clear finish line. It's a much more sort of responsible way to use credit. And you get credit on demand, you get the same convenience and flexibility as a credit card in terms of accessing the credit. But then you have the sort of forced discipline of paying it down every month. And so you end up saving on a lot of interest, because one, our rates are lower, or we start at 8.99 APR, and generally have lower rates than most credit cards. We have no fees at all. So the cost of a given balance is lower, but then the balance comes down faster. So you end up saving a lot on the cost of credit.
So that is a creative it's a creative solution, and it sounds similar to BNPL, which every firm is racing to sort of take a piece of that market. How is it different from BNPL? Buy now, pay later. Sorry, I should say.
You're right. I think it is the same sort of undercurrent that's powering the rise of BNPL and the upgrade card. the fact that a lot of people now understand that credit cards are bad for you, and you shouldn't get into credit card debt. So BNPL is a great way to finance typically sort of smaller item, maybe like $100 item that you're going to pay in 4 installments over a couple of months. Your credit card is the same idea as BNPL. So don't get into credit card debt. Don't build a big balance over time. Access credit when you need it, but then pay it down quickly. But I think with a great card, you can go sort of a little longer and larger items, right? So you can you can all the way to sort of renovate your kitchen, and it's going to cost you $25,000. You're going to pay that down over time. But a lot of it is just like furniture, and it's going to cost you $2,000 or $3,000, and you're going to pay that over 12 months or 18 months. So it's I think if you look at like each product has really a use case, like a sweet spot in terms of how it's being used. The NPL tends to be smaller items, shorter duration. A great card tends to be sort of larger items, and you can go longer in duration.
So there's theoretically room in the upgrade product portfolio for a BNPL offering. Is that something that you're interested in doing as well?
Yes, it is. Yeah. We're sort of actively working on a sort of different version of the upgrade card, sort of interest-free, that addresses that shorter duration, and possibly lower ticket item. The benefit in that case compared to other BNPL product is it's embedded into a card, which means sort of universal acceptance, right? Instead of being dependent on specific partnership with merchants, you have a card that is accepted anywhere Visa is accepted, which is sort of millions of merchants.
Great. I have more questions for Renaud. Now's a good time if people in the audience have questions to submit for Renaud. You can submit those by hitting the QA button on your webinar panel. I want to shift gears a little bit, Renaud, and talk about acquisition. And obviously, challenger banking is super crowded right now, and it's getting harder and more expensive to get new customers. How do you guys go after acquiring new customers for a reasonable cost?
Yeah, so I think that's another benefit of starting with credit. It's sort of using the appeal and the attraction of credit products to sort of get potential customers in the door. And then some of these customers are going to qualify for a credit product right away at a cost that they like, and will get either a loan or a credit card. And others either aren't going to qualify right away, or maybe won't find the product they like at the cost they like. In that case, mobile banking is going to be a way to get there. So to give you an example, last quarter we had 7 million sort of customers coming to us. Just in that quarter, 7 million applicants for credit products. And so only a portion of them would qualify right away. And for anybody who didn't qualify, they were offered a mobile banking account as a way to say, hey, we can't give you a loan or a card right now, but so open an account with us, do direct deposit into that account, help us get to know you better, and as we do, we'll get you on the path to a loan or card. So that strategy, I think, is good for credit products acquisition, because it sort of recuperates part of the funnel that would otherwise fall out. It's also a great way to ramp up mobile banking, because a lot of these customers take mobile banking accounts with upgrade as a ramp onto the credit product that they like. It's obviously not sufficient. I mean, the product has to be great. It's not none of this will matter. So we spent a lot of time in designing a product that we believe is a great product for that mainstream consumer, that really puts more money into their pocket. I mean, we talked about credit products being more responsible, more affordable, lower cost. Our mobile banking really puts a lot of focus on delivering more value to our customers. So you have no fees, ATM fee reimbursements up to 5 times a month. And you have the highest rewards program you can ever get. You have 2% cashback rewards on everyday expenses and monthly subscriptions, and 1% on everything else. So we believe that's the most you get rewarded for using your bank account. And over time, that adds up, and we believe that the value proposition of no fee, high rewards is really hard to pass by.
I really like that idea of people who don't necessarily qualify within the funnel being moved into a banking product. What does the ramp look like, I guess?
Complete on that. That's a part of the funnel. But another part, people who do qualify, but don't like the rates on the loan or the limit they get on the card. But by opening a mobile banking account with us, you can get a lower rate on their loan, or they can get better rewards on the card. Just because once we have that person as a banking customer, we get more information, get more data, more transactional data, we can do a better job underwriting them. That's a lower risk factor to us, so that helps us give them a lower rate on their loan. So I think for both applicants who do qualify and applicants who don't qualify, both of them would have a benefit, to have a benefit in opening a mobile banking account with us. Great.
I want to shift gears again. I was talking about your story, your trajectory, and you're actually one of the first. We're almost at episode 500 on our podcast of Tearsheet, and I was telling our team that you were one of the first participants in the podcast years ago. And I told them that you had found this is your third time around building a big company, and they asked me, why does he keep going? Which was a good question. I don't know the answer. What propels you to keep growing and starting new companies?
Well, the first reason is I'm 50, so I'm not done yet. But more seriously, I think there are so many opportunities to really continue to promote fintech as a way to make positive difference in people's lives, right? I mean, it's and it's not just altruistic. I mean, it's actually addictive to really sort of create products that get embraced by millions of people, and to know that we're really having an impact in people's lives, right? And I don't think I would keep going if we were making widgets that sort of don't make a big difference. But credit is, it makes all of the difference. And I was talking about this $8,000 in average credit card debt for every family in America. It's a big issue. It's $1 trillion problem that's really worth tackling. And so at Lending Club, I mean, we refinanced tens of billions of dollars of credit card balances. But while we were doing that, the total outstanding credit card balances due by consumers has continued to increase. So we couldn't refinance fast enough to really even make a dent into the problem. We said, okay, we've upgraded. Let's try a new approach. Let's not just refinance credit cards, but actually try to replace credit cards entirely. And I think credit card is the only card that's help you get out of credit card debt. So we think it's really sort of making a difference, and it's a fight worth fighting.
Good answer. We have a question from the audience. If you're open, Renaud, I'd like to invite up Joshua Norris has a question for you. Joshua, do you mind coming on screen, introducing yourself and asking your question? He declined. I have the question anyway. I thought it'd be interesting to meet Josh. Renaud, you have a long-term view and aren't afraid to take the hard path when building your business. What new challenges do you see coming for Upgrade in fintech / banking in general over the next 5 to 10 years?
Yeah, so I think the opportunities and challenging are enormous, right? I was talking with one of our group of employees, and we were strategizing about what does the future hold, what do we make more of a difference in people's lives. And I mean, the first, certainly there are so many other products that can really make a difference in mortgage and auto loans But the first one is just continuing to do what we're doing and having a bigger impact. Right? There's this Nielsen report that came out recently that showed Upgrade card was the fastest growing credit card in America. It was the first time a credit card, a fintech company got in the top 50 credit card issuers in this country. So it's a small victory, but we were number 48 on that list with some total outstandings of a few hundred million. And so CD and Capital One each 100 million in outstandings. And so that shows you that how fintech is growing fast, but in credit, payment, deposits, still nowhere near. Actually, payments it's starting to add up, but in deposits and credits and other parts of people's financial lives, it's nowhere near the size of traditional banks. So I think continuing to make our products more accessible, put our products in more people's hands, and really continuing to make a positive difference in their life is going to continue to be the goal. And that starts with building awareness, continuing to let our customers do what they've always done, which is talking about the product with friends and colleagues, and continuing to expand that way. But there's still a very long way to go in terms of relative size with traditional banks.
Got it. I'm curious. You mentioned sort of the new card that looks a lot more like BNPL. Can you talk about where you want to take the product portfolio in the future? Do you have the core products and it's just about growing, or are there parts of the portfolio that you think are missing that we'll see Upgrade add in the future?
Yeah. So, I mean, we're really trying to design products that have the broadest possible appeal to the broadest swath of the US population. We're trying to be more helpful to more people. So the basic version of the Upgrade card is extraordinarily helpful if you're using the credit functionality of the card. It doesn't do much for you if you're just a transactor. I think you're going to probably see more transactor products coming out from Upgrade for slightly higher end of credit, or who might not carry a balance every month, but will carry a balance from time to time. So that product looks a bit different from the current card. We like to make different type of rewards products available to different people. We have a card that's mostly about home, health, and auto. So the three categories, the triple rewards, single rewards, and everything else. We launched a Bitcoin rewards card. That's a great way to get your toe in the water for not necessarily early adopters, but are interested and curious about crypto. And then there's an entire body of work we're doing now on the lower end of credit. Again, trying to be more accessible with a secured card, with cards that are also better at would enable us to say yes more often, with smaller lines. Help consumers get in the door, get their first credit product sometimes, or sometimes the more responsible credit products that they ever had, and then help them and continue to help them along their journey. So we're really expanding on both sides of the credit spectrum and trying to appeal and be helpful to a broad swath of the population.
We're almost at the end. We had a last minute question come in. We have about a minute to answer it. This is from Nishant at Fundfina. Which metrics do you focus on when building a credit-led neobank like you did for the first few years?
Yeah, so we start with credit, and credit performance has to be the key. Again, I was talking about how long it takes to build a credit performance track record that will enable you to finance these credit products and offer them to banks and asset managers. So that credit performance, early delinquencies, all these early metrics that help us really see what direction the portfolio is doing and whether there's any adjustment we need to make. These are critical metrics. And then over time, when you start rolling out non-credit products, I think the attach rate is going to be a key metric where we want our customers to have access to all of our products and sort of benefit from mobile banking, loans, credit cards, and enjoy the combined benefit of these products. So making sure we do a good job there and help customers who have started with a credit product also get mobile banking and vice versa is going to be a pretty key business metric for us in the next few months and years.
Renaud, always a pleasure talking to you. Thanks for joining us at the Big Bang Theory conference.
Thank you. Great to be here.